there. Come to the A4G and Metro Bank presentation today. So I'm James Katiri from Metro Bank. I'm joined by my local business manager, Janet Sadler.
Hello.
Say hello, Janet.
Hello.
I don't know what people can and can't see, but Janet's on the camera, and I believe she's going to drop off because we need to keep the stream quality high. So I'm hosting today. Sorry, I'm just moving over to the slides there. And I'm going to take you through a little introduction to Metro Bank before Josh and Malcolm and the team at A4G run through the main topic, and I guess the reason why you're really here. So if you have any questions, please put them in the chat box, and I will be hosting a Q&A session at the end. We will endeavour to answer as many as possible, and please throw anything you find useful or want to know at us. Okay, so I hope everyone can see the slides. There's an about Metro Bank one to start us off, and I'm sure you all know quite a bit about Metro Bank. We're very well populated in the southeast, and we have a number of stores across Kent and the south of London. So Metro Bank was Britain's first new high street bank in over 100 years. We focus across retail, SME, and ultimately we want to be the community bank of choice. We empower customers to bank whenever and however they choose, whether it's in store, week. So we're open 8 till 8, Monday to Friday, or we certainly were before coronavirus. That is temporarily being put on hold with slightly reduced hours. We have the internet portal and mobile app, or via the telephone banking team, which is a UK-based. In 2010, Metro Bank has a network of 76 stores across England and Wales. We actually opened our 76th store yesterday. Normally we do a big grand opening. With coronavirus and the store ready to go, we did a bit of a soft launch yesterday, and that was a drive-through store, so completely contactless banking, opening our second store in Cardiff, which was great to see, and really shows what we're trying to do by investing in local communities and giving people different options for face-to-face banking. So each store has its own local director, so someone like myself who's tasked with overseeing the store operation, the team of local business managers, but also going out to meet business customers face-to-face, originating new business, and ultimately looking after the relationships along with the local business managers going forward. We also have a team of commercial relationship managers. So there's a chap called Mark Neely, who I believe may be on the call, but I don't think he's able to say hello because of the way Zoom's set up. He deals with some of our larger business customers, and I work alongside him on a daily basis. So we offer everything from personal banking and young savers up to high net worth individuals and everything in between. So whether that's an SME bank account, a larger business bank account, or just your regular day-to-day current account. Perfect. I haven't got control of the slides, so I might have to prompt whoever it is every now and again. So this is a great indication of how Metro Bank is viewed in the business current account market. As you can see, we have performed very well in the recent CMA, Competition and Markets Authority survey, which was conducted across 1,200 business and 14 of the largest bank providers. So Metro Bank actually finished second overall, just behind Handelsbanken, and we offer a really good 68% overall relationship satisfaction. Really important though is the quality of the online platform, and as you can see, we offer the best platform out there as voted by the general public alongside Barclays. So when you combine that with the service you receive in store and in the business centres, the overall relationship, we're a really strong prospect to work with SMEs across the country. Next slide, please. Cheers. So why Metro Bank? What are our USPs? I think the real USP for us is the dedicated points of contact available. So it's meeting face to face, over telephone or email. You've got people like myself, the relationship, the local relationship directors, the local business managers like Janet, or the commercial relationship directors like Mark Neely. We also have the business service team who can answer any queries 24/7 over the telephone, and you have various other points of contact if you so wish. So whether that's asset finance, invoice finance, cash management, we have plenty of the ground ready to answer your queries. And as I'm sure you're aware, if you haven't got a relationship with your bank, at least in what's been very difficult times, it's really important to be able to, might not always be the answer you want, but we will strive to help you as much as possible and have frank and open conversations with you about how we can support you. So business accounts opened in days, not weeks, is key as well. We offer a walk-in service, although temporarily due to COVID-19, we've had to move this to an appointment-only service. We also offer remote account opening. We've got the #1 rated platform. We're open 362 days a year. Well, again, in normal times. And we have a complimentary private banking offering for high net worth individuals. We've got attractive deposit rates across instant access, fixed term and notice. And we've got safety deposit boxes in every store. These essentially keep the lights on and fund the store's day-to-day activities by being available 7 days a week for customers. It's a really good source of income for us, and it's a great service not offered elsewhere on the high street. So day-to-day banking partner. Again, 2 million turnover, commercial current account over 2 million, foreign currency accounts across the 14 main currencies, including euro, US dollar, CAD, yen, community current accounts for charities, clubs or societies. We've got a really strong offering in that area. Insolvency accounts, and one of the things where we try to differentiate ourselves is in the trust and court protection account market. So trust accounts, it's very hard to find trust accounts with other account providers, and only this morning I was with a customer discussing how we could help them with their needs there. They said they'd spoken to a number of other providers and they just couldn't get the answers in a quick space of time. So online, mobile and telephone banking, and then we've got our business online plus and commercial online banking systems for those larger business customers where you've got payment limits of £50,000 and above, your bank feeds from zero, and multiple user accesses, etc. So got ahead of myself there slightly around the zero accounting software and the direct bank feeds. That's a really popular feature and something that a lot of customers find very useful. What we try to do is we try to keep the charges as simple as possible, and we'll generally look to do a customized or tariff. It's highly competitive, and if there's any customers on or potential customers on here who would like to speak in a bit more depth, then please do get in touch with myself or Janet. Structured deposits, so instant access, fixed term, notice, client deposits, are all things we can talk about as well. So in addition to that, we also offer term lending, overdrafts, credit cards, card acquiring. So card terminals will work alongside a company called Accept Cards. Business asset finance, so finance on machinery, etc., vehicles, invoice finance, both confidential and disclosed facilities. And a flexible underwriting with a human-led approach. So what that basically means in simple English is that we talk to our credit partners, and it's not just a computer says no process. You know, we actually look into the figures, we get to know the business, and ultimately we believe that leads to more successes with credit. So switching your business account to Metro Bank is a very easy process. We've got the 7-day switch program. So obviously there's certain parameters with that. So an annual turnover of below 6.5 million, less than 50 employees. One of the really good things about that is the auto redirect. So essentially your account will be closed with your current institution. If any current customers pay towards that account, it'll be automatically redirected to your Metro Bank account. You know, nothing is left behind, and all your payments, direct debits, etc., are automatically moved. I should also mention that if there's any RBS customers out there, we're part of the Williams & Glyn RBS switcher incentivized switcher program, and we can discuss that in more depth if that's you know, you're being asked to move over by RBS. So COVID-19's obviously been you know, completely unprecedented circumstances. Myself and Janet, Mark, have been really busy throughout the bank. Yesterday we launched the bounce back loan scheme for up to 50,000. We've been doing the coronavirus business interruption loan scheme for £50,000 and above since day one. The reason for the bounce back loan scheme being slightly delayed was due to us having to build a new online platform. That's now up and running, and there's good success stories, and clients have been really pleased with the outcomes there, being able to get the money so fast. We've also looked at business as usual funding, so whether that's increased overdrafts, credit cards, or loans to help them out in the shorter term. Repayment holidays across asset finance, portfolio buy-to-lets, commercial property, etc., have also been really important. I know Mark's had a lot to deal with on his plate there, and almost more importantly is we've been supporting the local community as well. So the Orpington store has been acting as a drop-off point for key supplies for the local. We've been doing food deliveries and leaflet drops. Quite frankly, we've had too many colleagues in store due to social distancing measures, and it's been great to see good work they've done in the community supporting the local COVID-19 support group. If you've got any questions, please do reach out to myself or Janet. I'm sure a lot of you will know me already, but if not, please do get in touch. I'll now hand over to Josh, then we've got Malcolm and Emma speaking afterwards. Josh will be talking about discussing your business ready. Is your business ready to make money? I can't read very well, obviously. I will pass you over to Josh now. Thanks.
Thank you very much, James. So let me just get my slides up there. So hopefully you can all see my slides now. I thought I'd begin by talking about back when lockdown started to happen. We started to do a coronavirus hub where we would be able to share information as quickly as possible with our clients and all of our network of people who know A4G, and open it up for anyone who wanted to join in. As part of that, we looked at what scenarios would happen to businesses, and this was before lockdown started, and it was quite clear early on that the main things that would happen to businesses is a lot would have to downsize, some that would be temporary, some that might be permanent, and some might need to go into hibernation, where the business is put to sleep for a period of time in the hope that it will wake up again as we come out of lockdown. Now, at that point, there were lots of clients talking to us about whether they should cancel contracts, make redundancies, and start cutting all of the ties that kept their business going. And we were saying, well, and as more legislation came out about furloughing and things like that, it became more and more apparent that the government were going to support us in hibernating so that we could wake up again once we needed to weather the storm. So by not cancelling contracts, just putting them on pause, by not making staff redundant and just putting them on furlough, it allowed us to have the opportunity to restart the wheels of our businesses as we come out of lockdown. Now, tomorrow is the deadline for putting any new staff members onto furlough. After tomorrow, if you've not put them on furlough, that means the door is effectively closed for new staff members going on to furlough. So that's, in my eyes, marks the end of the furlough scheme, because now it's just open for how we try and phase out of it rather than using it as a resource to keep us going. The other things are that a lot of businesses are going to be able to reopen from Monday, and we're also expecting more update on Monday about future unlocking of things in the economy and the wider population. So right now is a good time to start thinking about, is your business ready to make money? Now, there are effectively 3 areas that I think are important to consider. There's demand, because ultimately any recovery from this is reliant on the ability to generate sales. Then you've got the capacity, which is, usually you'd think capacity and labor are the same subject, but actually they're slightly nuanced, slightly different, so I'm going to cover them separately. But looking at how much capacity you have to produce those sales, and then ultimately, how able are you to bring your labour force out of furlough, or look at your labour force and say, actually, do I have enough staff to meet this demand, or do I have not enough, my capacity is actually limited and I can't bring all those staff back? So the first thing to do is to get your customers to talk to you. If you're in a business where your customers are, you have contracts with your customers and you might have a number of large contracts, that's going to be a slightly easier task than it is for other businesses, because you can just talk to your account managers at your customers to work out what demand they're going to make of you and use those expectations to start to make your plans. If, however, you're reliant on a number of smaller transactions, or you're dealing directly with consumers, then that makes that whole process slightly harder. One of the things that I've been seeing is the use of social media and online presence to actually survey your customers, whether that's customers you know are due to buy from you, or just generally to your customer base. With the way that social media is these days and things like SurveyMonkey, it's not too hard to build a survey and try and get some data from your customer base to see what demands there are out there. And ultimately, it's going to be a bit of crystal ball gazing, but to get some data and feedback is going to allow you to have a little bit more confidence in those plans that you make. You also might need to think about what products or services will be in demand, because coming out of lockdown, it's very unlikely that the same services or products you were providing in January and February are going to be the same ones you need to go into production with now as we come out. For example, cleaning companies that we act for are now looking to do more deep cleaning than they are some of the regular cleaning, because some of the offices aren't open yet. They need to do deep cleaning to get them open. Some higher risk customers of theirs may be requiring frequent deep cleaning. So that means they need slightly different tools and staff available, which means the mix of their products and services is very different coming out. But then that won't last forever. That will actually change over time as the lockdown changes and the risk factor changes. And also, there's a lot of news about dentists, and a lot of the vets that I'm talking to are talking about differences in the way that they're having to service their customers. As you know, with any crisis that's been pushed and off into the distance, and then all of a sudden they realise that the dentists are open, the vet practices are able to operate more normally, then all of a sudden a lot of crises will come out of the woodwork, and those will become the initial boost in sales that would be made, and then obviously that would die down, and then things change. When looking at what customers you're going to be servicing and what products and services you'll be providing, it's important to consider who owes you money, because it's a constant juggling act between getting the sales out, but then also making sure that you're selling to people who are actually going to pay you. If you've got customers who haven't paid you for a long period of time and owe you a lot of money, but they're the ones who are knocking on the door to be first in line to get services from you again, then you probably need to combine that discussion of restarting work for them, along with how they're going to pay their debt to you. Because ultimately, if there's no money coming in, then it's going to be very difficult to keep the staff going. Some different businesses are experiencing very different cash flow situations right now. Some have found, obviously, that if they're receiving money up front for their sales, then by the time that as the sales have declined over the lockdown, cash flow is now very tight. Some clients, however, where they have long credit terms for their sales, where it can take 2 to 3 months for their customers to pay them, have now found that actually the backlog of debtors have now started to pretty much pay up. So they're sitting on more cash than they're used to. However, as they go back into production, their staff are going to come on board. That's going to start eating into that cash, and then it's going to be another 3 months before really any significant inflow of money comes. So actually their cash flow problem will occur in 2 to 3 months' time. So knowing how that all factors into who owes you money and how you make arrangements with them for payments going forward, we all need to stick together effectively is the message I would be sending customers. If we all help each other, then we can all keep the economy going and keep going for years to come. You also should consider the margin that you make on different areas of work and different products and different services. If you have a line of work that requires more staff but makes a lower margin, then that could be appealing because it allows you to get more staff out of furlough and keep them working. However, that might be to the detriment of completing some work on a higher margin area of your business where you could actually use less staff but make more money overall, which would therefore have a bigger cash flow positive. It's going to be a balancing act about balancing those margins. And of course, sometimes you don't have accurate data as to what product makes what margin. But these are all things that you would need to consider. Once you've added all these things up together, then that ultimately gives you the answer of how many staff you'll need to fulfill what you expect to be demand on your business going forward. So then you need to turn to capacity. There's a lot of talk at the moment about doing health and safety assessments to make sure that you can state to the public that your business is COVID secure. I believe that's the term that they're bandying around for it. But ultimately, this means an in-depth health and safety review of all of your places of work. This is a legally binding document that you have to produce if you've got more than 5 staff. But I would recommend that for all people, this is a document that you need in place, no matter how many staff you have, because that document is going to be very important for a number of reasons. That document is a bit of a PR document to your staff to show that you have thought through how you can keep them safe as they come back to work. It's very important for your customers so that they know it's safe to visit you. And then, of course, it's also important if there is a problem. If someone were to visit your place of work, whether it's staff or customer or supplier, and they did end up catching coronavirus, you want to make sure that you can prove, if anyone tried to claim against you, that you've done everything you can to make everything as secure as possible. Another item you might want to look at is your insurance. Although there are legal requirements set out by the government about making your business COVID secure, your insurance company may have some specific conditions you need to tick off in order to make sure that you're covered going forward for the insurance. This is going to be something that it's best to talk to your insurance provider about, and I'm hoping that they are starting to release help sheets for different industries. So I've spoken to legal advisors, and they recommend as well that talking to your insurance company before going into any significant increase in business would be a good idea to make sure you're covered, because the last thing you want now is to not be covered for something insurance later down the line after having survived this bit. Then you need to make sure you communicate those plans to your staff. As I say, that's going to be really vital for making sure that you can show that they are able to return to the business. And all of this then adds up to say, well, how many staff can you accommodate? Because if you had a place of work that usually had 10 people in, but you can now only fit 5 with social distancing, then that means you're going to have to juggle how you get your staff into the business. This is going to have an impact on many things. So if you've got, you need 10 members of staff to do a job and you can only fit 5, does that mean you can only do half the amount of sales? Or does that mean those 5 members of staff have just got to work a bit harder and therefore runs the risk of burnout? So do you look at having a better staff rotation to try and compensate for that? These are all complicated things to work out on a very specific basis for each business and probably for each workplace. And then finally, we come to labour coming out of furlough. So as I say, tomorrow, the 10th of June, is the last day you can put someone on furlough because they have to complete 3 weeks before the end of June. From the 1st of July, all new applicants to furlough will be stopped. From the 1st of July, you have to have completed a full 3 months in 3 weeks in a month of furlough to qualify, and it can't overlap 2 months. So if you started the furlough on, say, the 11th of June, then you would fall into July by 1 day, and that's no longer allowed according to the rules. So tomorrow is the deadline for putting people onto furlough. From July, they're allowing flexible furloughing to try and encourage us to bring staff back, but not have the full burden of having a full-time employee that we can't keep busy for that full amount of time. But then from August onwards, the cost of furloughing will start to mount up for us as employers, starting with paying for the employer's national insurance and employer's pension, and then ultimately the furlough grant will start to cover less of that 80%. So I expect to see a significant drop-off starting to happen, but that does rely on further releases to the economy to allow us to go back to work. So as I said earlier, it's good to survey your customers, but it's also a probably good idea to survey your staff. There's a whole spectrum of people out there in your business. You'll have the people who are really keen to get back to work. They need to get out of the house. They want to come back and do something productive because they're bored stiff at home. But then you'll also have people who are either shielding, they might be protecting someone else in their household who's shielding, and they may have problems with childcare because not all children have gone back to school. The summer holidays are approaching, but you can't just go out and get someone to look after the kids. So there's going to be a lot of pressures on your staff. There may be some who want to come back, but just cannot because of their home situation. And you need to be fairly sympathetic to that to make sure that you're not breaching any of the guidance and employer situation. But then at the other extreme, you may have people who are refusing to return to work but don't really have a legitimate reason. And then once you can identify whether they do or don't have a legitimate reason, you obviously need to treat everyone fairly. If you find that they're refusing to return to work but they don't have a fair basis to do so, then you may need to look at disciplinary procedures against them. And because ultimately, if they're on furlough and you've asked them to return, then they have to return, and your health and safety documents will prove that it's safe for them to do so. But what if you can't return all of your staff? There are a range of options. So you may look to keep someone on furlough a little bit longer, and then you just have to make sure you're considering the impact of the costs of that. You may want to bring people back on reduced hours. Once furlough starts to cost a lot more money, so once we get into August and beyond, then you may start to need to look at whether it's more appropriate to lay off your staff. Lay off meaning that you keep them employed, but you put them on zero pay until work comes their way. And then the end of the road here is redundancies. So redundancies is something that at the very beginning of all of this crisis, a lot of our clients were talking to us about. And I feel that, well, I know that in recent weeks, this has become another subject that has been a hot topic of discussion. Because ultimately, if you're not able to get as many staff into the business because either demand isn't there or capacity doesn't allow you to have that many staff there, there's a limit to how long you can hold those staff before it starts to become a serious burden on your business. However, the cost of making staff redundant can also be quite high. You have to pay a statutory notice period based on the number of years of service they've provided. And then you also need to pay a redundancy payment at the end. You also need to go through a process of discussion with them to work out if there are any alternatives that you have for them. So ultimately, redundancies, although it looks like the way to get out of having some significant overheads that you can't cover, actually has a very high upfront cost. Another thing to bear in mind is that if you're on reduced hours or laid off for 4 weeks in a row, then the employee can apply to be made redundant and therefore force you to have that cost. So that's something to bear in mind there. You do have the option, however, to train staff on other jobs. So if you are able to move people around in your business, keep them employed, but do other work because of different demands on the business and different ways of working, then that's a good area to discuss to try and avoid making people redundant. Because ultimately, you want to try and work out a win-win solution between you and your staff, because they ultimately are going to need to try and keep hold of their jobs, and you want to keep hold of your staff so that you can deal with demand as it increases. The other thing is that outsourcing looks likely to increase to me, where there was a delay to the IR35 rules. So that basically is the rules that try and restrict one-man band companies and sole traders who just do one-off work for businesses or do contracts for 6 months. The revenue don't like that way of working, so they try and put a tax penalty on that way of working, but they've relaxed that, well, they've delayed the new legislation. So that means there's going to be a little bit more work in the economy for self-employed people who will do a few months work here and there. So locums, temporary workers, and people like that are likely to still be available in the economy for the next 12 months, probably slightly less until the end of the tax year, depending on what the rules say. So that pulls everything together, and then you're left with your combination of things of, this is how much demand I've got, this is how much capacity I have for staff, but this is how many staff I can get in. And then you weigh up that to work out whether you're under or overstaffed, and then you can make your plans going forwards. So something I just wanted to touch on is, from academic study and from our own experience, this is a list of the 10 most common causes of a small business to fail. I'm not going to go through every single one of them, because this is probably an hour-long presentation in itself, but I'm just going to highlight a couple of them because these are important things to consider as we move forward. The vision and principles, the vision from you as a business owner are really important, because you are setting the tone for the return to work, and then you need to communicate that to your staff so that everyone is pulling together and everyone feels in this together and able to work for the common good. The other issues to consider are that ultimately, if you're not already feeling a cash flow squeeze, the growth is going to have significant pains as you go forward. So having good management systems, having good understanding of your funding, and having a good handle on your financial planning and reviewing that is going to be very important as you go forwards. Now, the other aspects of this, we're going to look at marketing shortly, and one of the things you need to consider is your break-even point. So how many sales you need to make to cover your overheads. So I will now pass to Malcolm, who is our managing partner, who is going to go through some of the more technical details about how you work out your break-even point. So Malcolm, hopefully you can reconnect, and you're out there somewhere still.
I'm here.
You are there.
Thank you, Josh. I'm going to just share my screen with you, and that should probably kick Josh offline. And when I click the last button, you should be able to see me. So, and there you go, you should be able to see the screen as well now. So, what's your new break-even point? Now, I know that for many of you, you've probably never worked out your break-even point. Your business is doing okay, making a bit of money. At the end of the year, you send your records into your accountant, they work out how much profit you've made, what your tax bill is, what you're going to do with it, all of those sort of things. And as long as things are going along swimmingly, then there's not much else that you need to do. You probably don't need to work at that break-even point. But in the current climate, this is going to be absolutely crucial, because you've got some big decisions to make if you're not operating at or above break-even. So what I wanted to do is just run through with you how you can work that break-even point out. And essentially, calculating a break-even point is like going through your profit and loss account right the way through until you get to the amount that you're drawing, but in reverse, because you need to start at the bottom and work your way up. So the first thing that you need to think about is how much you need to live on. So what I've done is I've put a little example together here. You know, there's all sorts of variations of this depending on personal circumstances. There's some tax figures in there, which will be completely different for everybody that's watching. But I've tried to give an example that you know, might be a real world one that that you can follow. So the first thing you need to do is just sit down and work out what your monthly outgoings are going to be. You know, the grocery bills, you know, money for holidays, mortgage, etc. So in this example, somebody's done the exercise, they're coming up with £6,000. Then there may be that there's other family income. So it could be that there's a spouse that has a job external to the business. You never know, you might have an adult child living with you actually contribute something towards the family budget as well. So we're going to knock that off. It could be that you've got some investment income coming from elsewhere. So, you know, for somebody that is maybe semi-retired, there could be some pension income coming in, or perhaps more likely might be that one or two of you have got a rental property that you make a little bit of a profit on, which can help subsidise the monthly outgoings. Now, of course, that can go two ways, because if you've got a tenant in there who is struggling to pay the rent, it could be that you've got a rent coming in, and now what was actually contributing to the monthly household income is now actually having a negative effect because you've got more money going out and coming in. But we'll assume that's not an issue, and based on our little example here, that means that you've got £5,000 that you need to get from the business. So what we then need to do is say, on the basis of that you need £5,000 after all the tax that you're going to pay, how much tax are you going to suffer? Now, as I said, everybody's different. On this particular example, I've put in that it's a single person, so there's no splitting dividends with their spouse. And on that basis, roughly we work out that they would have £445 of dividend tax to pay, and they'd have some higher rate tax to pay as well, because that sort of level of income would make them a higher rate taxpayer. Now, add those two on means that your company, this example assumes a limited company. Some of you could be sole traders, partnerships, etc. But if it's a limited company, you'd have to make £6,000, £6,075 after tax. That would mean that you'd be paying corporation tax of £1,425 on a net profit of £7,500. So we're working our way up, and now we've got to the net profit figure. So if that's our required profit, the next thing we'll do is we need to add on the overheads. Your overheads are the costs of the business that don't have a direct relationship with your turnover. So your rent, your admin staff, the telephone, the accountancy bill, all of those sort of things. And on this example, we've got overheads of £24,000 per month. So that means that we've got a required gross profit of £31,500. The next step is to consider what your gross profit margin is. So if we had a service business, for example, you know, maybe in the building industry, and your labour and materials cost was coming to 70% of your turnover, then that would mean that your gross profit margin was 30%. So in this example, we divide the gross profit of £31,500 by the margin of 30%, and that now means we have a monthly break-even point of £105,000. The average month has 21 working days, and that would then give us an average daily turnover of £5,000. You may have worked out, but obviously I started with my final answer and worked backwards. When I calculated all this, the very nice round figure at the end is the giveaway to that. But essentially, that's what you have got to be doing a turnover of every single day. The reason we calculate it daily is because it's easier to picture a level of work on a daily basis. You know, particularly if you've got, if you're providing a labour-based service, you know, you probably know what you are looking to recover from the employees that are working on sites or whatever, and that can give you a little bit of a focus, and that's our average. So what you now need to do is think about that number. Is that level of sales achievable? Because if it isn't, we're going to have to revisit our outgoings and our overheads for possible cuts. We may need to go back to our personal budgets, you know, and maybe next year's holiday is going to be in Butlins instead of Disney World. It may be that you know, if you've had a child at private school, it may be you're not going to be able to afford that. It may be that you've got lots of mortgage payments, you're repaying some of the capital on your mortgage, and you're going to need to go to your mortgage company and ask if you can go interest only. There's all sorts of things you could think about doing to reduce your personal outgoings. You might also need to look at the overheads of the business and where some of the cuts could be made. You know, we've all worked from home a lot in the last few months. Does the business need that expensive office that you've got? Because if that annual daily turnover is not achievable, then you've either got to work much harder on your sales and marketing to get your sales up, or you've got to cut your costs down. The important thing is that there's continuous measurement. Now, you can work out a weekly turnover figure using your accounting system. If you can work out a work in progress figure at the end of the week, then one of the team at A4G can show you how to calculate what your weekly turnover is and compare that to that required annual daily turnover. Based on the sort of information that you're getting and the discussions that follow from those weekly conversations, that you will start making little changes to the way you're operating your business, which can improve your margins, improve your efficiency, maybe improve your upselling of whatever services it is that you do. Shortening that time frame so that rather than it being a quarterly set of accounts where, you know, it takes 5 weeks after the end of the quarter to get the figures, by which time, you know, we're well over 4 months since that period started, and you could have been doing stuff wrong for the whole of that 4 months. If we're doing it weekly, all those little discussions, all those little tweaks, they all add up over time to create a more efficient, more effective business. The other thing that you'll need to think about is your sales and marketing strategy as well. And again, for a lot of people that are watching this, you might not have really had a sales and marketing strategy. It might be that you know, the business started with just one customer, and then it's grown from there, and people have contacted you, and just doing what you do has brought work in, and you've never really had to think seriously about the sales and marketing strategy. But the key to getting that strategy right is to just think through a few key elements first. The number one thing that I would start with is your database. Now, going back 15, 20 years, I remember being in one particular client's office, and his database of potential customers appeared to be a notice board on the wall with lots of business cards pinned to the wall. And he was just sort of, you know, randomly following up some of those people. But we need to be a little bit more sophisticated than that these days. And if your business is going to really succeed, then everybody's got to be able to have access to information about all these potential customers. There's loads of little database packages out there, some which are designed specifically with sales in mind. Some of them link across with Xero, which my colleague Emma is going to talk about shortly. But you know, really good little products. And even if you just put stuff on an Excel spreadsheet with all the people down the side and all the columns of information across the top, that is still better than having nothing. The next thing you need to think about is how you're capturing potential customers' details. So that could be telephone calls that are coming in to your business, just inquiries about what it is that you do or what it is that you sell. It could be that inquiries that are coming onto your website, which I'll come on to shortly. It just might be people that you meet when you're out and about. And you need to be finding ways, putting little processes and systems together to ensure that all that information is finding its way into your sales database. And once you've got that information in there, you then need to start to think through which of the 3 key marketing strategies are going to work for your business. Now, it might be that you're going to do all of these, and it might be that you're just going to do one or major on one and a little bit of the others. You need to think all 3 of them through. You need to be thinking in terms of what is going to work best for my business, what is going to give me the best return on investment for the time and the money that I'm going to spend on these things. So let's start with inbound marketing. So historically, inbound marketing would have been you spending money on advertising in the local paper, on the side of the local bus, some magazine that goes through the door, just to create awareness about your business, and then people would ring up that telephone number and the work would come to you that way. And you know, that's historically the main form of inbound marketing. Now, of course, that type of marketing now is greatly reduced, and the internet is dominating, and obviously none of you can ignore that. And the critical thing you need to be thinking about is search engine optimization, or SEO for short. So this is all about Google. This is about how easy it is for somebody who has a need or want for your product or service to find you. If you're not on the first page of Google when they type in whatever they type, you are highly unlikely to get any of that business. So this is a whole industry all in itself, and I'm going to try and condense it down into about 2 minutes of advice. But the critical things are that you need to think to yourself, what is it? What terms will people put into Google to find the product or service that we offer? One of the big things is local, is your town, your area, your county. It depends what sort of service product you're looking for. They're going to be looking for how many people there are in your industry. And then just some of the key terms, really. So your website needs to have those terms on it. It needs to have engaging content that those terms are included within. There used to be some really simple cheats, like just typing the same word 1,000 times in white type on a white background, so that Google then ranked you top. But you know, it's much more sophisticated than that. The guys at Google are tweaking this stuff all the time. So just producing a good website with good content on there, which is regularly updated, and with the right words on it, will help get you up that search engine. But once they've found you, that doesn't mean that you've got them as a customer, because there's got to be engaging content when they arrive there. What does your website look like? Does it give the impression about your business that you would want it to give? Does it project an image of your business that is the sort of thing that potential customers would like? And when they've landed on those pages, is there a call to action? What does it tell them to do? Does it tell them to ring this phone number, or to fill in this inquiry box, or to download something? There needs to be a call to action. Almost every single page needs to have some kind of call to action, normally at the bottom, but maybe partway through. The other thing is, what sort of data capture is there in there? There's a simple technique will be to create some kind of download that somebody might be interested in, that's of benefit to them, but they have to put some basic information in about themselves in order to get that download. And then you've got that information, and that can then go into the database, which you might use for marketing purposes. And of course, the last part of this is social media. Now, I've deliberately put a question mark against that, because you have to be very careful with return on investment on social media. It's easy to spend, a whole day just putting stuff on Twitter and engaging with people that have got nothing better at the other end to do than put stuff on Twitter. You've got to find a medium that works for you. So if what you do is very visual, repairing or making jewellery or hairdressing, etc., then Instagram will be a good place to go. If it's quite sort of corporate, professional services, then LinkedIn may be a better place to go. But this stuff's changing all the time, and every now and again, one of my teenage daughter will tell me about something that she's looking at, and ultimately that is going to become a medium for potentially your product. So the second area, that's covered inbound. The next one is outbound. So this is stuff that's going out from your organisation, either perhaps in the post, as a mail shot. Whilst that might seem very old-fashioned, one of the theories of marketing is that it's more important to be different than be better. So if stuff's coming through somebody's door, you might have a bit more time at the moment to open it. Does that give the impression about your product you want to give? Is that a good medium to get potential customers? You can reach far more people with e-shots, but they can just, what is an amazing piece of marketing content from you could be spam to them, and they can just right-click junk, and then your emails will never get read again. So a lot of thought needs to go into e-shots. If ever I get an email that's found its way through our spam filter and it starts with we or I, then I'm probably not going to look at it at all, because they're just talking about them. They're not focused on me as a customer. So the stuff you send out needs to be really heavily focused on you. What does the other person get out of this? And then the third part of that would be telemarketing, actually picking up the phone and calling people. And again, you've got to be very careful about this. Obviously, there's regulations regarding the telephone preference service, etc. And you need to be following the right rules, but you don't want to be making a nuisance of yourself. But used in the right way, perhaps following up mail shots or following up these shots, that can be a good way to generate some extra business as well. And then the third part of marketing which is often ignored, surprisingly, because it's probably, if you're not doing much marketing, this is probably the bit of marketing that you are doing, which is referral marketing. So a lot of your business will come from your customers telling other people about how good you are, and then that person picks up the phone. So, there are things that you can do to encourage those referrals. The first thing you can do is just ask your customers if they're happy with what you've done. And if they are, just say, well, I'm looking to try and build up my business, get a few new customers. Please tell some of the other people you know about what we do, and encourage them to contact me. People like helping people that have done a good job for them. So that's one way, customer to customer referrals. Another way is to find somebody in a complementary field. So you may sell blinds, and if you do sell blinds, then I'm pretty certain that your customer has windows, and I'm pretty certain that you will notice whether the windows are in a good condition. Maybe some of the double glazing is blown. Now that means that you could be referring in a double glazing company. And if you're going to refer in a double glazing company, then perhaps that double glazing company might well refer you in for blinds. So there are other businesses out there that are not in competition with you, but who have the same customers as you do. Can you find a way where you can refer each other? This is the whole, some of the marketing groups have the thing about givers give. Once you've got these sales leads, whatever they are, the next thing you've got to do is follow the sales process. Now, there are hundreds and hundreds of different sales books out there. I've read quite a few of them. I realised after about the fifth one that they are pretty much all the same. They all go through 4 main stages of the sales process. And these 4 stages are preparation. That means getting ready for your sales meeting, or if somebody's going to potentially come with you, being prepared when they do. So business cards, brochures that you're going to give them, things that you can send them with links to key pages on your website. Finding out information about them. If we're going out to see a potential client, we will have looked at their accounts, we will have looked at their website, we will have asked the person that referred them to us about this company. So I know as much as I can about them before I meet them. That's key elements of preparation. Then what you need to do is the needs analysis. So you should be asking all the questions, finding out from that person what it is that they need or want. And you should be very open about that, and it may well be that when they finish that analysis, there is nothing that you can actually do for them. You may have actually identified a sales lead for somebody else, for another professional that you know, in which case you should refer that person in and walk away. If we are the other person in that sales process. None of us like to be sold to. None of us like somebody trying to sell us something at the doorstep or whatever that we don't want. So therefore, you don't want to be the person trying to do that sale. So find out what it is that people need or want. And if, based on what they need or want, there is a product or service that you have which meets that need or want, then present the solution. Show to them how your organisation will be able to meet that need or want. And then the last part, which is the bit that often makes people feel a little bit uncomfortable, is closing. Because, you know, people can and not make decisions. And sometimes you just got to ask a question. And a good friend of mine, he just says, so do you want it or not? And, you know, that's quite an honest way of saying things. He said that he feels that people are rarely offended by that. They really feel that they've been put under pressure. And if they don't want it, then they tell him. And he doesn't spend loads of time trying to chase them through for to try and close a sale that he's never going to close. So, but you need to find your own closing technique, which is appropriate to your line of business. So that's my 2 key areas done. You're gonna see me for a few more minutes at the end, and now what I'm going to do is put my glasses on so that I can actually read the instructions on the screen to hand this over to Emma, and then I'll turn myself off.
Hello everyone, thank you for bearing with us. Let me get my video on. Right, I'm going to talk you through cash flow and cloud accounting. So as many of you can imagine, cash flow is kind of a hot topic at the moment, and businesses are facing a bit of a strange one at the moment, because I think cash flow is, I'm not necessarily saying cash flow is good, but it's better by some of the measures that have been put in place than it would have been. And it's hard to predict where cash flow is going to go. So obviously what we've been talking to our clients about is, what date is your pinch point? Because there's going to come a point where these debts are kind of mounting up and they all become due. So that might be just from, you're going to open the doors again and you need to increase your stock and you haven't got the reserves there to do that. Or it might be when the furloughing is kind of tapering off, and so people that you aren't using but you kind of wanted to retain start costing you more and more money. Or it might be some of your other bills that's, you know, restart, like loan repayments or your rental. But there's some big ones as well. So a lot of people will be deferring their July payment on account personally and move that debt to the end of January when your normal balance would be due. So that 31st of January bill will be higher. They may also have put themselves on time to pay PAYE. And again, that's got to be caught up at some point. And the VAT quarters. So a lot of businesses deferred their February, March or April VAT quarter, and that is due to be settled by the 31st of March 2021. And if you happen to be a March year end, the 1st of January is when your normal corporation tax bill would be due. So as you can see, kind of Q1 of next year is looking like everything's got to be caught up by that point. And I think that's never a nice point, is it, after December when trade is generally down anyway. But I think for a lot of people, that's going to be the pinch point quarter. So at A4G, we've got a 5-minute cash flow tool. And I'm going to talk you through what that tells you. Now, this is something that we get our clients to run on a monthly basis with their management accounts. Just give them real insight into what their bank has available. So if you look at the total funds available in your bank account and your deposit account, plus your overdraft, that'd give you a total of £50,000. Then we look at kind of liabilities that are accruing. So that would be company tax bill. So we might know the figure, but we know it's not due for a number of months. So we'd put in the interval of payments. So how often you're asked for that payment. So with something like corporation tax, it's annual. And then how many months until that's due. The same with your VAT bill and a number of your other bills like rent or insurance. So that will come up with a figure that you should have kind of set aside for that. What we've bolted on now is obviously kind of the arrear payments that are accruing for businesses, which might be outstanding corporation tax from other years, the VAT quarter that's been postponed, maybe the PAYE, and all of that. So actually in this example, if you look at that, that's £86,000 of money that should be set aside at the moment to offset that. So if we take that away from the cash that we've got available, currently there's a £36,000 shortfall. Now, that's not necessarily saying, oh my goodness, there's a huge problem. What it's saying is you will have to catch that up at some point. And for a number of our clients, if we monitor this on a monthly basis, it also gives you a really good indication of your cash flow trends. Just so you can get a really good feeling that actually, are you normally short in that month because it's a particularly tight month for cash, and actually you do normally catch that up. So it's a really handy tool. Then I want to talk to you about the tips on improving working capital. So obviously for a lot of you, there are things you can control and things you can't control, and speed of your invoicing and your whole kind of finishing the sale, which will take you right through to getting paid, is how you can influence each element of that to just improve the speed of payment to you. So for a lot of people, invoicing is normally one of those jobs that might be done at the end of the month or every few weeks or just when cash is getting low. And I certainly think the kind of period we're facing now, everyone needs to be a little bit hotter on that and just look at speeding up every part of that process, which will include emailing out invoices rather than posting them. There's incredible post delays at the moment, and you can't rely on it, and it might hit someone's desk who's working remotely, and all these things will have an impact on your cash. Also, making it easier for people to pay you, make your payment terms clear, make your payment methods clear, just make it as easy as possible to do that. And then obviously being hot on credit control. Credit control is one of those things, I don't think any of us really like doing it particularly. It's not necessarily a part of a job that people enjoy, and at the moment it may be something that people want to avoid because there might be some very emotional conversations where cash is tight for some businesses. But actually you can't risk servicing the wrong client, and if there are going to be delays to what you're expecting in terms of cash flow, you need to know about them. So you just need to be polite and just on top of your credit control and know what you're owed. And obviously Josh talked about communication with staff, but it's also really important to communicate with anyone in your supplier chain about sort of credit terms you might need to extend, or if you're doing a big initial order, maybe you could pay that over a few months to start with just to help get you back off the ground, and all these things. But it is about communication now. It's being honest and open and communicating with people, because if you hide from these things, I mean, you all know it, if someone stops answering the phone to you and they owe you money, it's scary, isn't it? You assume they're not going to pay, you assume they're going under. Whereas if you are talking to people about things and making promises on when you are going to pay and delivering on that, it just eases everybody's sort of feelings, doesn't it? And then obviously there's some great time to pay arrangements at the moment. So if you are unsure of cash flow, as much as you might have the cash available to pay things, you might want to just hold on to that for the moment until you're confident in your cash flow. So how does that all link into the importance of cloud accounting? I think the one thing that lockdown has taught us is that actually having things on desktop has proved to be really problematic. Sort of having to make trips to the office that you don't necessarily want to do to find information on your computer that you wish had been stored on the cloud. Obviously, with regards to technology, there's long installs and updates, and often you get a lot of updates at once because no one wants to send you a CD to update the odd little thing. And obviously there's a risk of corruption. So I think that's the one thing we've all learned, is how we need to adapt our technology under current times. And then obviously, what are the advantages of cloud? Well, as most of you all know, we all come to rely on kind of our mobile phones as our lifeline to emails, to banking, and cloud accounting obviously has the same advantages, where you're getting seamless updates, you've got really high level security at affordable business prices, integration with your advisors, but also you've got that access anywhere, anytime. And that might mean that you could keep your finance team at home working, which allows your more office-based staff to come in, or it might be that you need to be a little bit more remote just to free up that workspace now with the health and safety concerns. So within the cloud accounting arena, there are 3 sort of big accounting softwares. I'm assuming most of you will have heard of Sage, QuickBooks and Xero. Well, Sage was the market leader till about 5 or 6 years ago, where, you know, accountants recommended it. It was kind of designed for accountants. It helped businesses get a good handle on sort of debtors and creditors ledgers, with a bit of information on profitability, but also it just helped reduce that bookkeeping cost on your annual affairs. Well, Sage launched their cloud accounting product, in which they didn't allow the transfer of data between their Sage desktop and Sage Cloud. I'm pretty sure their development guy would have got shot over that. But what it did mean is QuickBooks and Xero were able to transport Sage desktop information into QuickBooks and Xero, which gave businesses the continuity of data, but the advantages of cloud. And actually at much more affordable prices. So Sage desktop is significantly more expensive. You're constantly tied into sort of health lines and pay per user. Whereas some of the cloud products are designed to be significantly cheaper and a monthly subscription, and obviously you're getting regular updates. There's a bit of an illusion there though, that Sage Cloud is obviously the cheaper online product. It is slightly cheaper on a basic version, but it is nowhere near as fit for purpose as QuickBooks and Xero are for proper businesses to use. And just not as user friendly, and it certainly doesn't have the access to a lot of the add-ons. That is why we love Xero. So we recommend a lot of our clients to Xero, just because it is bespoke. You can really sort of adapt it to your business and what's important to you, and there's a significant improvement in efficiency that can be achieved by using Xero. So from a sales point of view, you can have your bespoke template for online invoicing, and that can then be linked to online payment methods such as Stripe, Go Cardless, PayPal, just making it really easy for the people that want to pay you and settle that debt to immediately pay you. You can also have tracking on the invoices, so you know if they've been read and received. And Xero, they have a basic function for automated debtor chasing, and you can actually upgrade to one of the apps that we would recommend called Fluidly, where you can really design bespoke chasing for your debtors. So that would work in terms of you might set it up to remind people a few days before the debt's due, just a very polite reminder. Can you just make sure you've got these invoices on your payment run? Thanks very much. The same as if it goes a few days past your payment terms, you might again just send a polite reminder to say, oops, it looks like they missed your payment run. Please, can you just make sure they're on the ledger and get these settled immediately? And then you can kind of evolve your communication with clients based on the period they're outstanding and your wording, and it would attach all the invoices. And what that allows you to do is to free up either yourself or your member of the team who's doing that type of chasing to really talk to the people that are avoiding you, the trickier ones, to work on payment solutions and keep everything moving, rather than what normally happens is people are really good at doing statement runs, and because of all that admin, they lose the time to chase the more complicated debts, which just get older and older. And in this climate, you can't afford for things to get older and older. And also that increases your risk, particularly, not all businesses are going to survive this. So from a purchases point of view, you can look at kind of automated data, using it for expense claims to make all of that just more easily manageable, snapping receipts on the go, and not ended up with a bag of sort of screwed up petrol receipts or losing your train ticket. And that provides the consistency. So from a purchases point of view, there are 2 add-ons that bolt into Xero really, really nicely. One's called Receipt Bank. Now that is a purchase invoice sort of capture system where it will read the data on your purchase invoices and avoid you having to manually enter all the details. And then you can store a copy of that invoice in your software. Now that can be done from a photo on your phone, from forwarding an email copy of a receipt, scanning, or you can set up, some of the big suppliers have what they call fetch accounts where you can link it with Receipt Bank and it will go and get your invoices so you don't even have to do anything. And it means that your suppliers are also consistently posted to your system in the same place. So you've got an energy supplier that you put it to electricity, it will go to electricity every time because of that supplier code. So you've got consistent, and it just again frees up your accounts team to work on the things they need. And often it's those people that you don't have enough of their time at the higher level to support you as a business owner. But then there's Approval Max that works as like an invoice approval system. So that is for any business that has kind of multi-stage approval for invoices. And again, it just avoids passing paper around and the delays that can cause. Because again, you know, potentially it's going to be put on someone's desk, they might not be in the office for a few days or not in the office at all, and it just sits there. The invoices go onto there, and then you have your order of authority, and you can just approve these things from your phone. And I've mentioned it from a purchases point of view, but actually it's something we use from a sales point of view to approve sales invoices going through. And it just speeds up that whole process for businesses. So they're really, really useful bits of software just to help improve your efficiency. Obviously, you've got online document storage, and that's not just purchase invoices and things. You can store copies of your bank statements, you can store important finance documents, insurance documents, and it just gives you that cloud online storage where all that information you might need is in one place. Now, one of the things we really love about sort of cloud accounting and just having this real-time data at your fingertips is it's really easy to edit report formats, but also you can break down your profitability in a number of ways. So you can look at your profitability just as a whole as a business to see if overall you're making profit. But you can also track it maybe by salesperson or area or whatever that sales driver is, to know what's performing and what's not, or per like activity or product, department, whatever it is, just so that you can really drill down into the numbers. Because it might be that you decide in this current economy that actually some parts of your business aren't worth continuing with and others are, but without this information it's just gut feel, isn't it? So there's month-to-month reporting, actual to budget. You've got prior year where you might compare sort of December to December, which is quite powerful because obviously we all know December can be a bit of a flat month with Christmas and holidays and people gearing up to Christmas and people winding back up in January. So it's really useful to see for your business how you compare to this time last year, or even, you know, so many Decembers before, and then you're comparing like with like. You've also got, within Xero, you've got things like projects, which is where you can compare job costing versus actuals. So for businesses, particularly in the current climate, you may be tempted to undercut your margins a bit just to win some work, to get some of your staff back and busy. Well, projects allows you to have that job costing in Xero and monitor your costs against that. So if you are getting tight on things, on your sort of sales figure, you can see that before it's happened rather than kick yourself afterwards, because you can't do anything then. Whereas if you can see it live, you can really influence that or as much as possible. So the reason we love the cloud accounting software, and particularly Xero, is there's all these apps and add-ons that link into Xero, and a lot of them are industry specific. So you can have this whole ecosystem within your business from sort of a database, client relationship management system that links into the accounts, that also has purchase ledger. And it just means that you aren't duplicating data, you're building something of value, you're improving your customer service and things, all from the cloud. So obviously, once you're on top of your finances, then you can really look at how you might need to fund growth or even fund your business while it gets back to normal. I mean, many of you will have been aware of some of the grants that are available. There are some little quirks to it. So if you are supplying sort of individuals directly, the general public, with services, it might not be all you do, or it might not even be 5% of what you do, and you might not run like a retail shop front, so you don't consider yourself retail. But a lot of local authorities are considering you retail if you do supply the general public, so you would have been entitled to the £25,000 grant available. And also some of the local authorities have got these pockets of money to support businesses in their area that were in real dire need. So we've seen some of our clients sort of submit case studies and have some additional support that way. So it is worth revisiting what you might be entitled to. And actually our article on Thursday night will give a bit more information on that if you want to sign up. Then for a number of our clients, we've been talking to them about research and development. Now that's where you are doing something to change an outcome. So you might not think that your problem solving on some of the work you do would be considered research and development. I think research and development is often thought of as kind of the science industry, you know, lab technicians, testing. But actually, if you are solving problems as part of your scope of work that the solution didn't exist before, now that might be changing piping or anything to get around a problem that is bespoke and unique, that can all qualify under research and development. And that is potentially an area that a lot of businesses aren't necessarily revisiting to see if there's sort of hidden tax savings there for the business to benefit from. But obviously, talk to your bank about overdrafts, the bounce back loans, the CBILS lending, because all of that is relatively cheap and secured by the government and might be exactly what you need, but it's important to know where you are with your figures first. So you've got to have a good solid understanding of your numbers and also the ability to try and forecast where you think your business might be. And there's a lot of apps that you can work with on cloud accounting software that can help you do scenario planning. So I'm going to hand back to Malcolm just to wrap up. Thanks very much.
Thanks, Em. I'm going to just share the screen and then start the video, and hopefully you can see me and you can also see the screen. So, strategic planning. Now, I'm not sure if any of you have done a strategic planning exercise at all, but you know, I've done a lot of these over the last 20 years with clients, and we always used to do them thinking about a 5-year time scale. But in the current climate, that's just too long, really. So a 2-year timescale is a really good way of doing this. And basically, all you do is you get the people in the room who are all part of one business. You know, sometimes it might be one person, sometimes it might be a husband and wife, sometimes it might be 4 or 5 business partners or co-directors or whatever. But you get them to talk about what they want the business to look like, to feel like, to be in this case, we're suggesting 2 years' time. So, you know, what sort of turnover and profit is it going to be doing, and, you know, how much money are you going to be able to take out? That's the numerical stuff, but on the non-numerical stuff, what's your involvement in the business going to be? A lot of our clients, you know, I'd almost say all of our clients fall into one or two categories. They're either not making enough money or they haven't got enough time. You know, so for many people, when we do those strategic planning days, it's all about how can I reduce my involvement in the business, take more of a back seat, be working on the business instead of in the business, that sort of thing. And then, you know, what sort of things do you want to achieve in that next 2 years? To win some industry award, to be the biggest provider of whatever it is you do in your local area, you know, whatever those achievements are. So start off with a really positive outlook, and what is it that we're aiming at? The next thing I ask is, where are you now? And the best answer I've got, of course, the answers are always very different to where it is they want to be, otherwise they wouldn't have done a strategic planning day. But the best answer I ever had was, we are a complete and utter bloody shambles, Malcolm. And that answer took me by surprise. It was a client that I'd worked with for a couple of years by that stage, and I'd sort of considered them to be quite well organised business. But what I discovered as we asked lots of questions was that up to that point, as their accountant, all I'd seen was the way that they managed their financial affairs. That was very well organised, but the actual operational side of things was indeed a complete and utter bloody shambles. And you know, there was all sorts of stuff going wrong, and the main director, the majority shareholder, was just constantly pulled back into that business. So now we've established where you want to be, where you are now. The next question you need to ask is, what do you need to do to get from where you are now to where you want to be? And a lot of people have many of the answers right at the outset. They kind of know the stuff that they've got to do. Sometimes, you know, if there's more than one opinion in there, more than one person in there, then there'll be more than one opinion, obviously. And those opinions need to be talked through so that we can come to some kind of agreement about the stuff that we're going to do. Later on in the strategic planning session, we'll get onto the real detail. But initially, you know, we just sort of start talking about some of the big things. And then the next thing will be what's stopping you from doing those things. So, you know, it could be something physical, like the size of your building, or it could just be something mental, you know, that you're just not prepared to do the things that need to be done in order to get from where you are now to where you want to be. And, you know, and we'll often have to discuss those things through. You know, maybe it's just a case of being brave enough to step outside your comfort zone. So that, in essence, is the key part of a strategic planning session. You know, later on, we will move through all the different aspects of the business, the marketing strategy, the people, the systems that you've got, the products and services, all those different things, and we'll examine those in a bit more detail. But, you know, that would be in a sort of a longer whole day session. You can do shorter ones than that, really. What we have put together for our clients and for other owner-managed businesses out there is what we've called the A4G Breakthrough and Recovery Program. Now, most of this stuff is stuff that we've done many, many times over the years for many, many clients. But these are very challenging times at the moment, and you know, we think there's almost a unique package of services that we need to do to help our clients. So this is all about coming up with something which will help your business emerge from the coronavirus pandemic and rebuild in a profitable and efficient way. And typically this could be over anything up to 2 years, which fits very nicely with that strategic planning approach. But it, you know, it might be over a bit of a shorter time than that. So first of all, develop a strategic plan for your business so that we know what those key goals are. Then identify the real break-even point and that annual daily turnover that you need to be hitting. We might need to identify ways that we're going to measure that and keep track of it, etc. Go through a profit improvement program, all the things that you can be doing to improve stuff, and that would, you know, lead on to developing a sales and marketing strategy. How we can streamline your financial processes to make production of information much better, and also reduce overheads at the same time and increase the time that you have available. And then also that short, medium, long-term cash flow forecast. You know, we've got to get through the next 3 months. And then after that, there'll be a whole load of other challenges as well. So That's us. That's all the things that we can do. I think I'm going to hand back now to James, who's just got a few questions to run through. So I should stop sharing now.
Hi, I think I'm back on now. All I can see is Malcolm. No slides anymore. So let me move to a different screen. So we've got a few different questions that have come in. So I'll just go through them in order that they came in. So the first one was, can I recruit new people while I still have some staff on furlough?
Yeah, I think that one probably is for me. So yes, there's no reason why you can't recruit people whilst you have staff on furlough. You just need to be careful about the roles you're recruiting people into, because you don't want to recruit someone that then means bringing someone out of furlough means there's no job left for them. So you need to make sure that that sort of thing is clear. But there's no reason why you can't recruit someone to do something that you do, a specialist skill that you need to move forwards that your current staff base can't do. But you also need to think about how you communicate that with your staff.
Yeah, I guess the perception with staff's really key there if you want to keep them motivated and what have you.
Absolutely.
So again, this one's probably for you as well. Actually, can I make someone redundant while they're on furlough?
Yes, that is possible. You need to make sure you go through the normal processes for redundancy. So you need to have a period of consultation with your staff member and explore realistically, are there other things that staff member can do? But ultimately you can then put them onto their redundancy notice period whilst they're still furloughed. I know it's a little bit controversial because this furlough scheme is actually called the coronavirus job retention scheme.
Yeah.
I've had this checked out by lawyers, and it's actually, it can be quite helpful for a business if some of that notice period is paid by the furlough scheme, because obviously it reduces your cost. But if you are making someone redundant whilst they're furloughed, you do need to top their pay up so that you're paying them 100% of their pay, not just the furlough amount. But yes.
And that's the same with holidays as well, isn't it? That you have to top them up if they take holiday.
Yes, so holidays should be paid at someone's full rate, or you come up with an alternative arrangement where you can either pay them for holiday untaken, or they have an extension that they can take holiday in the next 2 years rather than taking it in your normal holiday calendar. But as that all came in, that was all a bit of a mess as it came in, and it's now a case of working it out as we come out of it so that everyone is able to get back to business.
And then the next question is, when will we get more details about the furlough extension?
So there should be more details released by HMRC on Friday, which is one of those really frustrating things, that the deadline for putting someone on furlough in order to keep them furloughed into July is tomorrow. And then you have to wait a further 2 days to know the actual details of how the furlough will work from July. So it's a bit of a frustration that they've put those 2 days that way round. But on Friday, we should get more details. We'll do a bit of analysis, and I'll be sending out, putting an article on our website and an email to anyone on our mailing list over the weekend.
So I feel like I'm peppering you with questions
no,
here.
That's all right. I was going to say I'm going to have all the questions first.
Yeah, I'll give you another one now, which is coming from Monique. If you do have to make someone redundant, can you still make them / ask them to work out their redundancy? Does redundancy mean they're on gardening leave?
Not necessarily. So you can make them work their notice period. That's the whole point of them having a notice period. It's a bit like if they were to resign, they have to work for a certain period of time. You can force them to go on gardening leave. It depends on your contract as to how that would all work out. But you could also ask them to leave immediately, and then you'd have to pay that redundancy notice period as a lump sum. So it depends on what works best in your situations. I think at the moment, most people would, if they haven't got work for someone to do, then they would probably keep them furloughed whilst they're in their notice period.
Of course. Okay, the next one, there's a lot from an anonymous attendee. I presume they're not all the same people, but same person each time. But how do I stop time wasters online?
I saw that one in the
Who's
question.
going to take that one?
Yeah, I'm assuming that's a sales and marketing question and not somebody asking advice about their being harassed on Tinder or something. But yeah, talked about the inquiries box on your website, etc. There are. I think when we're making buying decisions at the moment, we've all got more time, and we're all shopping around a lot more, and you can spend quite a lot of time on these things. I guess it depends what it is that you're selling, but I think if it's a service, if you're asking the right questions at the outset, in sort of an initial email exchange or whatever, if you think that it's somebody that's probably not likely to be a good customer, then hopefully if you've got some good marketing material, maybe you could send them some information that might answer many of their questions, and then maybe there might be a good customer in the future, really. But yeah, it's all about that return on investment, how you're spending your time, and are you spending it on the right people, but trying to avoid offending people if they are wasting your time a bit.
I think that the question, I think it was you, Malcolm, actually, who mentioned the question around one of your colleagues says, or one of your friends says, are you looking to do the deal almost, or are you looking to proceed? That, that's really key, and something myself, Janet and Markle use a lot in the banking industry. You can have lots of nice conversations, and although you want to you want to have the conversations and support as many people as possible, ultimately sometimes you've just got to ask the question, because there's no point wasting everyone's time. Yeah,
absolutely. Sometimes you just got to be, open with people, really, and yeah. So.
Yeah. Sorry. I'll turn my camera back on. I'm just conscious that to read the questions, finger is taking up a lot of the screen, so apologies about that. With the next question, is what do I have what do I do if I have too many staff?
That's a big question.
Yeah, it is. I don't know whether we're able to, whether the person who asked it wants to refine it slightly.
Yeah, I think generally the answer to that is going to be that they need to move fairly quickly to understand what's the nature of them being overstaffed, what's the nature of their demands going forward. So how long will they be overstaffed for? And then assessment of the costs involved if they were to cut their staff base down, and then work forward. Once you've got the facts of saying, right, this is how long I expect to be short staffed for, this is the cost of keeping the business overstaffed for this period of time, and this is the cost of if we have to make redundancies, and then weigh up a plan in between there. It's going to be, if you've got staff who are already furloughed, that's going to make that calculation very different to if you've got staff who are not furloughed right now. That's a question that I would want to be looking at as soon as possible, probably before close of play tomorrow, to work out if anyone needs furloughing in an emergency tomorrow. But hopefully they've already got staff furloughed.
I think there's another sort of financial aspect to that as well, which is, that we've seen in the past, really, which is where people need to make cutbacks, but actually they haven't got the money to make those cutbacks. So it's almost like they've locked in to an unprofitable business model, because the amount of money they're going to have to spend on redundancy and notice periods is unaffordable. And we have written a few times on the nightly emails that we've been sending out about some of the insolvency processes that people might need to consider. We're when people are in that position, we're not big fans of the whole Phoenix company, because it just destroys so much. When a company closes and the owners start up another one. But there is creditors' voluntary arrangement, where you can do a deal with your creditors to to write off some of your debts and spread the remainder over a period of time. And if you've got a big upfront cost of letting people go, then a CVA could be a potential route for somebody. I think you know, once the HR team have done their calculations and then you realise it's unaffordable, that may be the next discussion.
Great. Emma, I think the next one's for you. The question was, can you recommend a CRM system that works well with Xero and links well with Xero?
Well, it really depends on what industry you're in. So a lot of the CRM packages are industry specific. So Xero had something called the Xero App Marketplace, where you can search for apps in your industry. So that is somewhere I would look first, but also for a number of our clients, we produce what's called a scoping document, where we would look at what they're trying to achieve by having a CRM in place and sort of all the areas of the business that can affect, and how you have kind of a suite of business tools that all link together to really benefit the business and the customers. So, I mean, if whoever asked that question wants to email us, we're happy, or set up a call for tomorrow, we're happy to run through that with them and just point them in the right direction, because there are lots of amazing things out there, but some of the best are industry specific.
Fantastic. The next question, again from Anonymous, who's very busy, is how does the person, the individual, get their partner to take more responsibility?
Shall I answer that one?
Yeah, yeah, it's quite a tough question.
Well, yeah, you know, partnerships are tricky things, and you know, most people go into partnerships with the best intentions. You know, they're often friends, they work together, but actually, you know, you very often find that it's one person ends up with all the responsibility on their shoulders, and the other person is essentially an employee taking home half the profit. You know, that is sometimes where a strategic planning exercise can really help. That you know, it's almost a little bit of relationship therapy. And I had one that I did where this company provided a service and was also had aspirations to manufacture, and essentially that was because one partner was running the whole maintenance service, which made all the money, and the other partner was a bit of a dreamer who wanted to build this new amazing bit of technology that was going to take over the world, although it probably wouldn't have. And they kind of discussed it, and they settled on, well, when the company is financially stable, I think that was the term they used, then we'll start manufacturing it. And they both kind of eased back into their seat, and I went, hang on a minute, guys, you're not getting away with that. I said, what do you mean by financially stable? And the guy wanted to do manufacturing meant that they didn't have anybody knocking on the door demanding money who hadn't been paid. And the guy who was running the maintenance side of things, which made all the money, said that he wanted to be taking £9,000 a month net from the business, and that they had £250,000 clear funds in the bank. And I said, well, you have no agreement here. You know, you just settled on a woolly compromise of words that actually is completely different. And you know, and sometimes as partners, you've got to really just thrash it out and be honest. And we're big fans of getting a partnership agreement together, not necessarily a 20-page document prepared by lawyers, but just one that sets out who is responsible for what. And that discussion, the biggest value comes not from the document itself, but from the discussion that takes place in preparing that document. And that's when you realise, you know, that's when one party realises that they're not prepared to you know, put up their house as security to guarantee the overdraft. They're not prepared to work 50, 60-hour weeks. You know, they're not prepared to bring in the do the things that need to be done to bring in new business. And you know, and often that discussion leads to the partnership not getting started in the first place. But you know, how do you get them to take more responsibility? Probably, if you don't do it now, then it's never going to happen. You're just going to be locked into this relationship. forever. At the moment, you've probably got an opportunity to say, look, if we don't talk about how we're going to run this business together for the next few years, then it's probably going to fail. So talk to them is the short answer.
Yeah, ultimately it'll probably just kick it down the line and it'll rear its ugly head later on, won't it? So I think that's a pretty good answer.
Yeah, but bring us in as a facilitator. We're good at being bad cop in these situations and pointing out the things that the hard-working partner might not feel brave enough to point out.
Good. So we've got two more questions. So if anyone else has a question, please do get them in. Again, anonymous. I know directors can access the furlough scheme, albeit this is only limited to the salary component, which is usually set as a minimum wage. Will dividends be considered in the future? If not, how else can directors access help?
Yeah, so sorry, I was trying to find my unmute button. I think this is a difficult question because there isn't anything in the pipeline as far as we can see. The Prime Minister was questioned about it at the liaison committee, and he responded to the question by saying he will be looking into it and was very conciliatory to director owners of companies. But in reality, I can't see that there's going to be anything else released to give extra funding. I think that directors of their own small companies have been left out of these grants. And I think now the focus of government is on trying to wean us off these grants rather than trying to increase the grants available. Although they did extend the self-employed one, which was a bit of a surprise. I thought they might not do that. But that does leave you in an awkward position if you're an owner manager of a business that's not able to generate the income to keep you going until you know more about when the lockdown will be released and when your business is going to be able to recover its sales. And really at the moment we are looking at options of financing and things like that, but ultimately they are finance. It's stuff that's owed back if you take it out. So there's not as generous an offer of grants for people who own their own limited companies. I have heard people say, I wish I hadn't set up a limited company. I'm sure that in the past, there's lots of good reasons to be a limited company. It's just that right now, with these grants, you do seem to have been a little bit forgotten, which is an extremely frustrating position to be in.
Yeah,
all I would add to that is I wouldn't rush to necessarily make a decision on changing your business structure at this time, unless you needed to for the purposes of CVA or anything, just because obviously there's a significant amount of money that has been used to support businesses, and there is inevitably likely to be some tax change in the coming years to recoup some of that. So I think, probably sit tight for a little bit and look at it in the new year, just to see if there is any sort of hints at what they might do to tax rates and national insurance and things. So I just wouldn't rush to make those decisions just because in these circumstances they might have been slightly better self-employed. I wouldn't be surprised if longer term they claw that back from the self-employed, if that makes sense. So that's all I would say is, focus on what you can do to get the business up and running, and focus on sales and marketing and, trying to keep your operation tight rather than necessarily changing business structure at the time.
Great. Last question, I believe, is, last question. Would you recommend Xero for a charity? Can you use Xero for restricted funds and gift aid donation and to account for gift aid donations? If so, is there a Xero recommended add-on? So I guess that's going to you, Emma.
Yeah, I mean, I haven't seen the use of the sort of normal Xero subscription for charities. I don't know if any of the other partners have, but I certainly think the chances are there will be something industry specific out there. With Xero, there's a number of sort of different versions of Xero where you can use it to sort of analyse bank accounts more quickly, and and put funds. So it might be that you need to use something different, but depending on how you're accounting for things at the present, if you're using sort of spreadsheets, or maybe there might be like an old-fashioned accounting app that can be a bit cumbersome, I think there's probably certainly a way of sort of using technology, not necessarily Xero, but to sort of improve the accounting. But if you want to drop me an email, I'm happy to look at that for you over the next couple of days.
Fantastic. Let me just double check whether there's any more. One. No, but excellent content and information. Well done. So thank you to Paul for that. I think that is it on the questions. We'll just give anyone a couple more, few seconds more. Anything else from any of the panelists?
That's good. Thank you, James. Thank you for hosting this. It's been really good.
No, thank you, and thank you to kind of the silent members of A4G as well, like Amanda, who put a lot of hard work into organising this, and thank you to all the attendees as well. I hope you found it useful, and you know, if you want to get in contact with anyone at A4G or myself or Janet or Mark at Metro, then please, of course, we'd love to hear from you. Thanks all.
Brilliant. Thank you.
Thanks
Thank you,
everyone.
James. Thanks all.
Cheers.
Bye.